To survive volatile markets, discipline is essential, more so than strategy or indicators. Volatility punishes bad habits, not just bad trades. When a trade moves against you, or price runs, an undisciplined trader panics or chases entries, making them unpredictable, not the market. Discipline distinguishes consistent traders from the gamblers. It means that you stick to your plan, you manage your risk, and you wait for confirmations and wait for the right entries, even when your emotions urge you to break the rules. Long-term success requires self-control, as the most dangerous factor in a volatile market is an undisciplined person trading. And it doesn't matter how much you've made either. A season of having low self-control can wipe out months of progress. Let's talk about how we can train our mind to make the right and righteous decisions in the market, inshallah, if God wills. Welcome. This session will not focus on charts or indicators, but on the single greatest detriment of long-term trading success and success in general, whether it be in business, on the charts, wherever. Discipline is the separation factor, which is going to separate from who's successful and who's not, who's going to be sticking to their stop loss, who's going to be adhering to their risk management, and who's going to be able to take the setups that they said that they're going to stick to. Self-mastery and emotional control, whether in the business world, on the charts, is going to be the separating factor between who's successful and who's not, and who's going to be winning within this world. Let's go and let's jump into the presentation. So the volatility trap, right, where most traders fail and fall in a downwards direction. Volatile markets, like cryptocurrency, amplify human emotional biases. Same thing with futures, leading to impulsive and destructive decision-making that quickly can drain capital. But it doesn't have to be that way, I really promise you. When the market is volatile, it's extremely bearish, which means markets falling in a downwards direction quickly. Or if market's extremely bullish, which means markets going in an upwards direction quickly, you need to be prepared for either sides. Okay, if you're telling yourself you want to invest into some spot cryptocurrency, right, which is where you're going to be making money when price goes in an upwards direction. So if market is volatile and it's making a certain low, you need to think of that as a positive. If market's dumping down really fast, you shouldn't think, oh my gosh, I'm losing all my money. No, that's going to be an opportunity for market to collect more ammunition and sweep back up further. You have to understand that no matter how low the market's dipping, when you're trading a good asset that puts a smile on people's faces and helps the future within a couple of weeks, months, or years, inshallah, a lot of the times, and you could check out some old price action to see if I'm lying, you'll see price recover way past where it fell below, okay, and previous all-time highs as well. In order for price to keep breaking into new all-time highs, market has to fall in a downwards direction. Market has to come down in order to go back up. It has to collect ammo and collect liquidity. So don't fall into FOMO, okay? There should be no fear of missing out, okay? The fear of missing out causes traders to enter late and buying near the top based on social media hype, ignoring their own analytical framework, and doing things like that. Buying based off of hype is going to destroy your P&L. You should be looking at the chart. You should be knowing what type of economic decisions or factors happen within the world to base your assessment on how much you're going to invest. Okay, once the SEC laws started getting passed and Bitcoin started becoming a more government-friendly asset, it started going up to new all-time highs. We started seeing 100K plus get passed. So analyze what's happening within the world and on the charts before just making a certain decision, before you just sell everything or buy quickly. And fear, uncertainty, and doubt, FUD, this can lead to panic selling at the bottom during a market correction. Okay, make sure you guys are trusting God. You guys don't need to be panic selling. You don't need to be making yourself lose money quicker than you need to. Sit on your trade and wait for the trade to cook. Wait for take profit to get hit. And locking in losses just before a rebound hits is what keeps people unprofitable. Wait for market to hit your take profit before you close your trades. The majority of you are losing money within the market because you're selling too quickly. You think you're going to hit your take profit overnight, the next day. No, sometimes trades are going to take days, weeks, months. That's why I tell you guys to do everything on your higher time frames, okay, to remove that cognitive bias from you from the smaller time frame. You need to have your higher time frame bias and understand that the market is going to take months, weeks, years, and days in order to get to where it needs to be. So don't sell off of a quick couple of days with the price action. Stay on your trade. And two key psychological phenomena drive irrational exits and entries, okay, trying to avoid loss. The pain of a loss is psychologically twice as powerful as the pleasure of an equivalent gain. Okay, so humans prioritize survival mode, but don't just think losses as survival mode. When you're down in your P&L, don't think that you lost. You only lose your money when you decide to close your trade. Okay, when you exit the trade, then you are going to be out of your money. Okay, until then, market can continue to do whatever it wants. Hey, not saying to sit there and hold trades forever, but a lot of you are losing because your stop loss is way too small. So if you're on options, I recommend your stop loss be the contract itself. Try and buy 1 to 2 years out, okay? Buy a leap contract, and this way you can sit on your contract for some time. Same thing for your shares. Try and hold your shares for some years. There's also going to be some long-term tax benefits for crypto and shares when you're holding your trade for over a year, meaning that they want you to hold for a long time. Same thing with futures too. Don't get destroyed by the prop firm cycle. Boot up your own live account, have enough margin, and hold your trades overnight. This way you can play the real structure, and you're not going to be taking any trade on the block, destroying your account much quicker than you would trying to conform to somebody else's rules, or even worse, trying to make some quick profit. That's never how we want to think on the market. Never think quick in the market. Okay, and confirmation bias. Seeking out only the news and opinions that support a trade that you already entered, ignoring clear signs that the market trend has reversed. Okay, not everyone knows everything. Okay, read the chart and do your own economic decision making when it comes to getting in and out of trades. Okay, and you gotta have a plan. Lay out your blueprint. Okay, if you're a break and retest trader, wait for resistance to get broken and turn into support. Okay, if you're a reversal trader, wait for support to get formed and catch the right side of the V into an area of resistance or support above current price. Okay, have a blueprint. Know what you're buying. Okay, if you tell yourself you want to buy $500 or $1,000 worth of Bitcoin every single month, you got to do that regardless of where the price is, because you're trying to DCA, and DCA means dollar cost average. Okay, stick to your plan. I don't care what you're trading, futures, crypto, options, it doesn't matter. Having your blueprint and developing an ironclad plan that you pretty much never break is going to set you apart from every other trader. Discipline begins before you place a single trade, and an ironclad trading plan removes emotions by codifying exactly when you enter, when you exit, and how much risk you're going to manage. Okay, if you have $1,000 account, for example, right? If you have $1,000 account, you should not be trading with more than 10% of your account at a time, ever, which means that no single one of your trades should ever be more than $100 if you're trading on $1,000 account. Okay, try and trade between 1 to 10% of your account at a time. This way, you're going to have a significant advantage in many ways. Okay, make sure you have that advantage. Okay, to stick to 1 to 10% of your account per trade. Do not break this rule. I don't care how much your account is up or down, try not to ever break this rule. And define entry and exit criteria. Your plan must specify clear, objective, technical, or fundamental conditions for both entry and exit, and never enter a trade based on gut feeling or instincts. Make sure you guys have definitive, structured layouts and boxes checked. Be like, okay, market did this. Okay, market did this. Okay, cool. I think I'm ready to get in. And have a rule-based entry. Okay, here's an example. I will only buy asset X if the daily RSI is below 30, for example, or I will only buy asset B if the V formation is starting to form and curl in an upwards direction on my daily or 4-hour, or I'm only going to buy asset C if market hits this certain price and I'm going to buy the dip. Okay, see how you want to structure your plan and stick to it, and stick to your time horizon and review your schedule. Define whether you're a scalper, day trader, swing trader, or an investor. Okay, do you like to trade for ownership? Then maybe you need to look towards crypto and shares. Do you like to trade based off of speculation? Then maybe futures and options are going to be based for you. Or you could take that futures income and put it into crypto and shares. That way you guys are going to be able to get that speculative money based off of your skill quickly, and you're going to be able to take that and put that into ownership. This way you're going to be able to leave some crypto for your family if you ever pass, God forbid. Okay, or you'll be able to leave some things down for the future. Okay, so your future you is really going to be happy that you sat on your investments. So make your future self happy and plant your seed. Okay, think of it like a big tree. You got to plant it. Okay, water, sun, water, sun, water, sun. Okay, that's how you have to grow your account. Make sure you guys are getting the proper water and sun every single day. Okay, rather in real life too, you got to keep your emotions based. Okay, make sure you guys ground, try and get some outside time if you can. It's not good to live like a rat, especially in today's generation with all this technology and stuff everywhere. If you can, especially before the market, if you're a day trader or something, have some outside time, get some oxygen, touch some grass, touch some plants, take a walk, and really work on your mental health. Getting closer to God is going to be one of the easiest ways to get better mentally. Okay, it's going to give you the full layout on how to be a good person here on this earth. Okay, and keep yourself from being mentally sick. Keep yourself from hurting yourself. So when you lose a trade, you're gonna be like, oh, I'm broke, I don't this and that. No, you gotta relax. Okay, you gotta chill. Even when you lose a trade, understand that sometimes you're gonna lose. It's how you handle that loss, and it's how you prepare for the loss too. And you must stick to your chosen timeline and resist checking shorter time frames if you're a long-term trader. Okay, don't be caught up on the 15-minute bias if you're on the weekly and daily time frame. Okay, your take profits aren't gonna hit as quick as you think all the time. Give it time, let your trades cook, and take your time. Protect that capital of yours. Okay, what are you trading for? Some of you open up your broker account and just start losing all of your money. Okay, you're not on the market to lose money, and the main reason you guys are losing money is because, one, you're closing your trades too early, especially my futures and options traders. Okay, you're just gonna literally delete capital like that. Okay, my crypto and shares traders, you guys are a little more stable. Okay, due to the fact that you understand ownership. Ownership a lot of the times is going to make you profitable, especially when you're owning something that puts a smile on people's faces and helps the future in many, many, many ways. And the prime directive, right? Capital protection. Okay, the most important rule in trading is not how much you can make. It almost kind of doesn't matter, but it's how little you can lose and how healthy you can keep you alive year after year after year, month after month after month. Risk management is the mathematical enforcement of discipline. Extremely important to make sure you guys are trading within your 1 to 10% of your account rule. Okay, as you get better, you can increase from 1%, but I recommend you guys even start off with 1% when you're first starting trading. Okay, this is really going to help you guys just get down to the motions of, okay, you know what, take profit gets hit, boom, let me go ahead and do this, let me go ahead and do this. Okay, but as you get better, you can increase it to like 5% and then even 10% at the max. 10% is going to give you 10 trades before you blow your account. Okay, 5 trades, 5% is going to give you 25 trades of your account before you blow it up. Okay, and then 1%, you're going to have 100 trades. So depending on your percent is going to determine how quickly you're going to be gaining profit, but also how quickly you'll be losing profit too. So think about that. If you have a higher win rate, extremely high win rate, feel free to go up in your percentages within the 1 to 10% range. And a non-negotiable stop loss, right? Extremely important. If you say you're going to close your trade here, okay, I don't care if it's a stop loss or a take profit. If you say you're going to close your trade at a certain area, close the trade. Some of you guys are literally extremely undisciplined and you're wondering why you're not making money from the markets. Take profit literally gets hit. You got to close at that certain area before you get reversed on. Okay, it's not like you're just, oh, I'm going to close here. I'm going to close at this area of resistance because I want to. Oh, I'm going to put my stop loss here underneath this area of support because I want to. No, if price were to clip past underneath that area of support, price might fall down dramatically. And if you're a long, that's not what you want. Okay, same thing if you're in a long. If you win, you hit take profit, close at an area of resistance or support above current price. Okay, make sure you guys catch your gap fills. Get your money. Some of you guys are just losing your trades since you want to hold way too long. You gotta know where you're exiting at. You gotta know where market wants to temporarily reverse in order for it to continue its flow. Understand the staircase method and head over to StackMODE.net. I have a free course for you guys so you guys can understand the charts and market a little bit more, and tons of free videos too. A stop loss order that's pre-planned, right, is really going to help you out. You're going to know, okay, if market goes here, market will instantly close out my trade, or I'm going to close out my trade here. Okay, and it's where you admit the trade idea is going to be wrong at. And in volatile markets, a stop loss must be placed the moment the trade is entered. Okay, because market can make an extremely fast move and you might not be ready for that emotionally. You might have a $500 stop loss. Okay, but if you didn't set your stop loss, say you were like, oh, I'm going to close manually, and market decides to go down and turn that $500 loss turns into $1,300 loss because the candle was so fast, you might freeze, you might pause, you might panic. And that's not what I want for you guys. Okay, so set your stop loss with a order if you can. This way, when market hits that order, it'll automatically close your trade the best that you can. And it's going to prevent catastrophic loss and help you protect against unexpected flash crashes or major news events, which definitely happens. Especially if you're on futures or forex, you don't want to be getting what's called margin called. Okay, this is going to be something where you might be owing the broker money if you go below their requirements. So keep that in mind. Okay, and never risk more than a small fixed percentage of your total trading capital. Once again, stick to 1 to 10% of your account per trade. If you have $10,000, your maximum loss on any one trade should be capped at $100 to $1,000. And this ensures that a string of losses will not wipe you out and allows your edge to play out over many trades instead of just getting destroyed instantly and quickly because of a bad couple of emotional decisions. Okay, you gotta callous yourself. Think of yourself like a turtle shell. You know how turtles have that shell? You gotta put the shell over your account. Have the protection so you're not out here getting swooped up and eaten by every single bird and shark in existence. Okay, take your time, protect your account. Emotional detachment, right? The zen of trading. This is why it's really important. Wake up. I pray to God instantly. Okay, I read Quran and I just am in a way better mindset. I'm in a calm mindset. I'm in an entranced mindset, and I'm ready to succeed for the day. And once a trade is entered according to your plan and stop loss is set, your primary job is to watch the market execute the strategy without interference. Place down your trade, hold, okay? You're either gonna hit stop loss or you're gonna hit take profit, okay? You're gonna hold until either one of these. And it's really cringe too. Don't close your trade before stop loss or take profit gets hit, because what you're doing is destroying all of the math. You're destroying the risk to reward ratio, okay? Let's say you're taking a trade, right? And you win a 1-to-4, okay? Let's say you risked $100, okay? If you risked $100 and you hit a 1-to-4, that means you would have made $400, okay? So that's $300 in profit, okay? So hitting your risk to reward ratio is going to be important for growing your account within a mathematically correct way. This is literally how the math of the market works. If you're making more than you risk, you will become profitable, okay? You will become profitable, inshallah, if God wills. You have to make more than your risk. If you're risking $200, okay, then you should be at least trying to make $400 at the minimum, okay? And that's going to be a 1-to-2, okay, since you're going to be doubling your money within an asset, okay? That way, if you take another loss, you'd at least cushion. So try and at least always trade for at least a 1-to-2. You should at least always try and double your money within a trading scenario before it's closed. And once a trade is entered according to your plan and stop loss is set, you have to watch either take profit or stop loss gets hit. Please don't be touching your trades with your hands, because if you're impulsive, you're emotional, and you're led by your flesh, you're going to destroy absolutely everything. So overcoming impulsivity, impulsive decisions, and moving a stop loss further away, adding to a losing position, right, doubling down, or exiting too early are the quickest ways to violate your discipline. And mental reframing exercise, right? When you feel panic or greed, physically step away from the screen for just 5 minutes, okay? Go pray to God, go breathe, okay? Take a step outside and ask yourself, do the market conditions violate my original trade thesis, or is just this noise right now? And if the thesis is intact, you must adhere to the plan, okay? You gotta adhere to the trading plan. Why are you breaking your trading plan? You say you wanna go put your mom in that big crib, okay? You say you wanna take care of your wife and your kids, or you wanna take care of your kids or whatever. You wanna take care of yourself. You want to go get the lamb, yet you hop onto the market, breaking your discipline, breaking your trading plan, not taking the setups that you said you were going to take. We don't have time for this. We got to go harder, okay? We got to go harder. When you feel panic, when you feel greed, you have to understand that that is the enemy. That is the devil. And we have to pray these emotions away, okay? Al-Baqarah mashatan al-Naim. Okay, it's very important for us to pray this away. This is just the devil trying to attack you guys, so you guys get pulled back away from the goals and dreams that you want to feel and be attached to, okay? The devil does not want you to be happy, okay? But understand that God loves us. God wants us to be happy, and this is why God even talks about in Quran about spending moderately, okay? You have to know how much you're risking, and you have to stick to your plan. And the art of taking profit is extremely important. Greed causes traders to hold winning trades past their logical target. And this is something that's happened to me. Okay, I'm trading straight P&L at one point in time. Okay, looking at the money. Okay, I remember I hit this one really good trade on C3AI, and I've started seeing the bands go up. Okay, start seeing the money go up. I've hit plenty of trades like this. And the next thing you know, instead of me trading based off of the chart, I start trading based off of P&L. And guess what? Since I'm greedy, and since I was trading with my eyeballs focused on the money instead of on the chart and focusing on my discipline, everything was taken away, or my win was not nearly as big as it should have been, due to the fact that I didn't stick to my logical targets. And I don't want you guys to go through that either. Your plan must include defined profit targets. For example, target 1 at 2R or target 2 at 3R, okay, where you sell a portion of your position to secure gains, ensuring that you never let a winning trade turn into a loss. And make sure you guys also set your stop loss to above break even or certain levels too, to even keep the trade going and flowing. And only God's perfect. So if you make a mistake and overtrade a certain day, at least care about what you did. Journal down how you felt. Journal down the emotions you were feeling when the trade was in your face. Were you close to take profit, but did you close your trade too early, ruining your risk reward, leading you to take another trade and then crash out your account? Or what type of scenario led to you losing that trade or overtrading in certain scenarios? When you really write it down, you're able to visualize and see your mistakes. It's a lot harder to repeat them over and over again. Discipline is really a muscle that has to be trained, and the trading journal is the feedback mechanism that allows you to objectify your performance and eliminate certain weaknesses, especially when you have your numbers jotted down. If you see certain things that you're doing is leading you to lead certain results that's not making you happy, then you need to change some certain things up. And your journal needs to capture certain things. Make sure you have your pre-trade analysis, how you're feeling before the trade, why you entered, and make sure your criteria is met before you press buy or sell. And talk to yourself. How do you feel emotionally? How did you feel before, during, and after the trade? It's really crucial for identifying certain biases, especially when market changes certain directions. You know how to pinpoint certain issues that you're having. And violations. Did you adhere to your stop loss and your take profit rules? And ask yourself why. And talk about the market context too. Did you take a long? Did you take a short? And note the macro environment. And do your weekly and monthly review. Treat this review like a performance audit. When you're trading, you're your own business. So identify your most frequent violation and need to cut certain things out. If you're constantly moving your stop loss, your issues and strategy, you got to stop being led by your flesh. You got to be way more disciplined than that. If you want to touch that big bag, even when you touch that big bag, it doesn't really matter. It's about keeping it. You're not going to be able to keep it if you keep moving off impulse. Okay. Your loss aversion and lack of conviction in your plan can really lead you to certain areas that you don't want to be led to, such as overtrading. When you overtrade, one tiny loss can lead into a whole destruction series of your account. And it's a lot harder to bounce back from that, just from one tiny loss, especially on things like prop firm, where you're chasing certain parameters. So detach from the money, focus on the charts, and be more disciplined. And trading small is really going to help you in certain areas too. If you notice you're feeling a high amount of pressure, like I have to win this trade, you probably shouldn't be in it. Okay. If you lose the trade, you should be completely comfortable. And just like the previous slides we talked about, staying within that 1 to 10% risk management parameter percentage field is really going to help you out. Okay. It's going to be a lot harder to blow your account when you're not going over 10% of your account per trade. Okay. You could do 5%, have 25 trades, and that's a lot of trades before you blow your account. You shouldn't be that inconsistent, truthfully. You got to wake up, pray to God, and be consistent with every dollar that you generate. You also got to be a little more loose within the markets too. You got to stop being so restrictive. Having super tight stop losses and trying to micromanage every piece and point of price action is a good way to lose all your money and be frustrated. Okay. Play with much bigger stop losses and give your trades some time. Sit on it for some days, some weeks, some years, and really let your money sit. Okay. If you're going to invest, you can't be desperate for income. One thing I recommend you guys do is hide your balances. On all your brokers, you should have the ability to either hold down your number, and this way, even if you're down, you're not going to be tripping. Okay. You could be down 50%. You're not going to be in anxiety. You're not going to be in survival mode, because I can assure you within a couple of days, weeks, or months, price will reverse and go way past wherever your original take profit was. Okay. Market has to go down in order to come up. So you can't have certain emotions, especially in volatile markets. Okay? If market's moving super quick, you can't feel like you have to close your trade instantly, because you're not going to be able to see the bigger picture. Being on the higher time frames, your monthly, your weekly, and your daily is really, really important. Because if you're too zoomed in on your smaller time frames, that fast price action is going to look like the scariest thing of all time, especially when it comes to futures, forex, and things with margin like that. But it's really not that bad. So I really recommend you guys stay on your 4 hour plus, turn on your extended trading hours, of course, but try and stay on your 1 hour on like the lowest time frames a lot of the time. Because when you're on your super small time frames, price action, especially during volatile days, news days, etc., it's going to look a lot quicker than it needs to be. And on the 4 hour, it's going to look like a normal trade, or going in a completely different direction than you might think. On the 5 minute, you might be looking at a bearish scenario, and then on the 4 hour, market's going in an uptrend. Okay. So you can't go off of your lower time frame bias. I truthfully believe it's there just to get your emotions riled up, especially when it comes to future scalpers and things like that. You have to know your higher time frame bias, and don't get tricked about that. Okay. There's plenty of people who are successful within the market who just buy and hold, who never even taken a look at the charts. Okay. So before you tackle volatility, you have to build the discipline to execute your plan. and you have to get those psychological parameters down. It's really, really, really psychological, the charts. You can be really, really good technically, but if you don't close at your take profit, it won't matter. Or if you feel like you're better than closing at your levels, then you'll definitely get punished, reversed on certain areas, and get what you deserve. Market is also very, very fair. So if you're disciplined, you wake up, pray to God, you close at your levels, I can assure you 99% chance, just like my students, you'll see a very, very, very successful upwards equity curve in your account. But if you're undisciplined, getting greedy, even when you've hit your take profit, trying to trade past that, it's not about the money. Okay. If you break your cycle, break your consistency, and start averting from your plan, it's going to build into you. And then that's going to build into bad habits. That's going to lead to you being overconfident in certain scenarios that's not logical, leading you to overtrade. And when you crash out your account, you might be frustrated on the market, but you should just be frustrated at yourself. Okay, I don't want you guys to go through that cycle. That cycle can be really, really hurtful, especially when you've been grinding your business, grinding at work, and putting that money into the market, expecting to make some money, and then you lose everything. Okay, I don't want you guys to be going into debt, going through frustration, losing your account. So please just wake up, pray to God, and plan your trades. Okay, promise me, if you guys watch this video, plan your trades before you put a single dollar into whatever. I don't care if it's Bitcoin, options, forex, futures. Promise me you'll plan your trade. Okay, don't ever just trade thinking that, you know what, I'm gonna get in this making some money. No, have a technical plan. Know when you'd exit, know how much you're going to invest, know how you're going to close your trades as far as take profit and stop loss wise, and have this process repeated, especially once you find your positive flow. Once you find your flow, I don't care if you're taking break and retest. If you're a breakout trader, I'm not going to tell you guys to trade one way, because different things work for everybody on the planet. It's the cool thing about life. Okay, God give us all individual separate brains for us to do separate things. If you're a breakout trader and that's working for you, you need to stick to that. If you're a reversal trader and that's working for you, you need to stick to that. You can't get on YouTube, see what this person's doing, and then change everything even though something's working for you. Okay, find your process, find your flow, find what you like to trade, and then stick to that year after year after year after year after year. Think of it like working out, for example. You can't get on the floor, do 20 push-ups and 6 crunches and get a six-pack. It takes days and days and days of eating consistently, eating clean, okay, working out consistently, getting the proper sleep, making sure your bones and your muscles regenerate properly. You have to treat your account, your income, or your business the same way. Okay, you have to be consistent. You can't have $10,000 in Bitcoin and then think $20 is not a lot. Okay, this is why I say you have to detach from the money. You could have 5 million in Bitcoin and still, when you get $5 extra, throw that into some Bitcoin. It's about the habit. Okay, I'm telling you, when you build that habit and you start thinking and planning and doing your actions for the future you, the current you will be a lot more happy and you'll be leveled up a lot quicker. Okay, so head over to StackMODE.net for all trading education. Catch you guys in the next one. Stay prayed up to God. Keep grinding. Peace.